Afternoon, everyone, and a very, very warm welcome to what I think is a extremely timely conversation this afternoon around the digitisation of pre-trade client workflows. This afternoon, we're going to be touching on challenges today, potential solutions, what does the future hold. We will be having a Q&A session towards the end, and could I ask people to send in their questions via the functionality on the platform, which will make my life easier in marrying up the conversation with the relevant speaker. We're also going to be having a number of polls throughout the session this afternoon. Audience interaction is always really helpful, especially understanding some of the views and opinions of the audience to really help drive our conversation this afternoon. Finally, we will have a quick wash up on the close. So our panel this afternoon, our group of speakers, as you can see, a very, very experienced group of people for you this afternoon, made up of representatives of both the buy, the sell side, exchange venues, and the financial technology community, who, as you will learn during the session, are being incredibly innovative in this space at the moment. Now, before I ask Matthew Chung to give a quick summary of the recent Financial Markets Insights report that was produced on the topic to set the scene for the conversation, it would be really useful if we could just quickly go around the room and ask the individual speakers to introduce themselves. So first off, Andrew, if you're there, could you just say hello, introduce yourself very quickly, please?
Yeah, absolutely. Andrew Mawson. I head up strategic partnerships in our FIC e-commerce sales team at JP Morgan. Thank you very much for having me.
Thank you, sir. Andy Ross, over to you.
Good afternoon, everybody. My name is Andy Ross, and I'm the CEO of CurveGlobal, which is the LSE's fixed income futures derivatives exchange clearing at LCH.
Thanks very much, Andy. Ayaz, you next, please.
Afternoon, everyone. Pleasure to be here. I head up data content at Goldman Sachs, very passionate about standardisation.
Thank you. We'll definitely be coming on to that one in a little while. Richard Turner, could you go next for us, please?
Yeah, hi. Richard Turner at Insight Investment, senior trader in predominantly in FX. I also do some equity trading, but also lead up the innovation on the strategic partnership side at Insight with regards to technology. And just for the record, this is in November.
Thanks very much, Richard. Chris, over to you, please.
Hi, good afternoon, everyone. I'm Chris. I work for TP-ICAP, and I lead our products and technology development for equities and derivatives globally.
That's great. Thanks very much, Chris. Craig?
Sure. Hi, my name is Craig Butterworth. I'm the Global Head of Sales and Account Management at Symphony. For anyone who's not aware, Symphony is a secure and compliant collaboration platform which can be used to automate workflows. It's built for the specific needs of financial services, so it's end-to-end encrypted, users own their own data, and it's powered by a trusted directory. Prior to Symphony, spent 20 years on the sales side in a mixture of head of fixed income sales, COO, and digital transformation roles. Thanks for having me.
Thank you, Craig. And Matthew, over to you. Could you do the quick intro and obviously give us that summary to set the scene for our conversation this afternoon, please?
Yeah, thanks, Clive. Thanks all the panelists as well for joining and everyone in the audience. So I'm Matthew Chung. I'm CEO of ipushpull. So what we're looking at today is around where some areas of the capital markets operate in a highly liquid and electronified and efficient way, particularly in standardized exchange traded contracts like futures, options, equities. Many others still involve a great deal of manual, unstructured pre-trade activity, with emails and spreadsheets being the primary workflow tools that are used. So this creates friction, which is bad for client services, increases costs for both the buy side and the sell side, and it hampers liquidity. It also creates unnecessary operational risk, and that arguably feeds into systemic risk at an industry level. So given that the industry has seen significant advances in technology in recent years, why do these manual processes such as emails, spreadsheets, file sharing, copy, paste, and voice continue to exist? So that's the question we're looking to answer today.
So moving on. So what's wrong with the current state of pre-trade negotiation? What are the main problems you're seeing on the trading desk over at Insight, Richard?
So at Insight, we have heck of a lot of manual processes, and that's regarding price discovery, amongst other things. And when you have manual processes and something like price discovery, there is a huge amount, of risk in terms of keystroke risk, in terms of typing things into from one execution system to another. And also on the side of the bank side, the sell side, when they're receiving that price, obviously there is the same risk inherent in their systems as well. Now, that said, we also have to satisfy our best ex and reg requirements from a point of view of trading and so forth. And what can often be the case is that we can spend 2 or 3 minutes trading a particular product and spending up to 30 minutes in terms of filling out at the back all of our risk reg requirements, which obviously is not a good use of our time. And also, they don't really add much value in terms of what we do from a trading perspective. So it's better for us to spend our time doing that. I think predominantly it's probably a lot better for us if we spend our time look at doing the analyzing and adding value from a trading perspective, and allow anything that's a repetitive task to be taken on by the machine or a bot or a robot or whatever it is you want to call it. In a sense, we should be programming these bots so that they do these manual processes, and also in a far better and more accurate way than a human would do. So I think the big problem within that is that step change requires resource, and from our perspective at Insight, we've got a lot of huge amount of focus on resource and lots of different stakeholders. And in order to get your priority to top of the queue, you've almost got to climb Everest to get that across the line. So that's another problem that we've got. Another key element that we've had to deal with recently, and I know we've been speaking at length about this previously, but is collaboration across desks at Insight. We have 5 or 6 trading desks, and often those 5 or 6 trading desks can have the similar sort of problem. But what we've been finding is that they're very siloed in their approach. They're owned by different business leaders, and this can cause just political problems across the organisation. So it's quite important that we collaborate across teams.
Thanks very much, Richard. You've articulated a few sort of generic pain points there. Andrew, just from your perspective, what are the real inefficiencies that are holding back the voice business versus electronic these days?
I think it's less about holding back the growth of the voice business, more about maybe looking at the relative inefficiencies between the two businesses. I think we see inefficiency across the entire trade lifecycle in our voice business, between both the client and the sell side. That goes on at the price discovery phase, as Rich said, through the negotiation, into execution, into booking, probably less so on the confirmation and settlement side, anyway. We hear from our clients on a daily basis, and I think Rich just alluded to it there as well, that a lot of this is about double entry. It's about keying from one system to the other, about managing multiple channels of interaction. Obviously, there's been a huge proliferation of ways of contacting clients and dealers. You have chat, email, phone. You even have some nascent, what we call hybrid solutions by fintech providers. And all of that adds up to just inefficiency. I think when you're in that negotiation stage, we do see it from our clients' perspective of that collation of competitive pricing, both from a commercial perspective, but also maintaining their best execution requirements. That's pretty difficult. The manual booking, and actually, if you wrap the tight controls that we are mandated and it's prudent to have around these businesses, if you wrap those around it, that leads up to hugely inefficient processes, both for the clients and for the banks. And I think it really boils down to one thing, and that's the standardization. There's lack of standardization across many components of the voice business today.
Thanks, Andrew. Ayaz, earlier on, you brought up that word standardization and said you were it's a real passion of yours. So from your perspective, why is there no real standardization in pre-trade at the moment?
I mean, to say there's no real is probably a bit harsh. I think, there's been pockets of standardization that have occurred over the years. And, FIX probably being the best example pre-trade, but also, like things like FPML. Now, I think the reason that these haven't really impacted the voice kind of workflow pre-trade is probably a couple of reasons. Number one is that the standardization efforts have tended to kind of correlate around electronification of markets in general, right? To electronify a market, you need to have standardization. So, it's kind of a forcing function to that.
That's like FIX with equities and why that's
correct.
been so successful.
Exactly. And, the other thing is that it's cultural to a degree. And, you can kind of see there's correlations between, business functions which were maybe a bit more operational in nature, where there's been a lot of focus on, the ROI of doing those functions manually, and things like confirmation, for example, and all of that has been electronified. So we're in this kind of strange position where the pre-trade is still kind of very manual, but then after that, a lot of that is then STP. And so, I think now that margins are under pressure in the front office, there's a lot of there is the right amount of focus there. The other angle to this is how do you standardize, right? It seems daunting, it sounds daunting, but technology's come a long way there. Through organizations like Finos now, there's tooling to help the industry standardize very quickly, and we can kind of do those things in weeks and months, whereas previously they would have been measured in years, which obviously wasn't very appetizing for the industry.
Yeah, I can see definitely it's growing pains, sort of largely in some of these areas, as you alluded there, Ayaz. Chris, if I can come to you, given what we've just heard from Ayaz and also from Andrew, why do you think spreadsheets are still so prevalent in the industry?
Well, thanks, Clive. So I think the question that answers that is, without them, could you imagine how much more inefficient we would be? I think if you look at like the point Richard made around how long it takes.
I think everybody's nodding there.
Yeah. If you look at how long it takes with all the kind of processes we as an industry have built up within Excel, within these spreadsheets, we've solved for a great number of problems. And now when we're coming to look to address them, everyone works in a kind of resource constrained way. Typically it's in the development area, and the backlogs are in terms of like which problems get solved first. When you come to an area where there is a solution in place, where it's a case of how do we take this task and automate it, the two factors at play you're looking at is return on investment, return on equity, these kind of metrics, as well as opportunity cost. And the latter is kind of the big point for everyone. I know our clients experience it, we experience it internally as a firm. We have to be very selective about which problems we solve, because the development area is the hardest point to get resourced. If you look at actually what makes Excel successful, the kind of skill set required is much lower than, say, Java or HTML5 or any of these the kind of new technologies out there. It's much easier for someone with kind of business SME type knowledge to sit down, take a problem and solve it in Excel. And the ones that scale really well kind of escape Excel. But actually, if you actually add it up, a lot of these problems rarely actually justify the legacy, certainly the cost historically, of migrating them off. As technology is becoming more prevalent and cheaper, I think we're going to see a new era where it's easier to deliver that. And certainly some of the platforms out there we're seeing are moving that way. But it lets you standardize where there's no standards in place. It lets you take data and standardize it in whatever makes sense to your internal systems. Fix works well for very simple products like equities, FX, where there's kind of a single thing. But where you're trading kind of more packaged, more complex products, understanding what you're trading, understanding the different parameters of that trade is not something that's easily expressed in a kind of machine readable, understandable way. It's still something that rests very much of humans and our ability to look at a string of text to understand what it means. And Excel is a great tool and a great solution for that.
Obviously why I stuck with the equity markets, not able to cope with the complications of the more esoteric products. Thanks very much for that, Chris. So Andy Ross, what do you feel the barriers are to addressing these issues, and why has progress been so slow?
I guess I've got 2 points to make. The first point is there's some really topical news. If you look at Australia, the Australian stock market hasn't been up for 2 days to do with the turnover. And they're a great bunch of people and run a brilliant shop. This is not about criticizing them at all. But resilience in markets is super important. And we've come from the LSE. We have resilience ground into us. So changing something, moving from a stable environment, whether that's stable with manual processes, but it is stable, to a new environment that's automated, has inherently huge amounts of risk in it.
Yeah.
And that means in the type of business we're in, which are making big decisions, you get a buy and a sell wrong. That could be because the testing's not right, because the process doesn't work. You could be costing not thousands, but millions of pounds in terms of impact. And so the risk reward dynamic here is difficult. And we have a very regulated environment. And so that hugely regulated environment that different people are under a different element clearly drives us to have much higher barriers to change in certain places. And so my view is that when you look at something like a clearinghouse like LCH, or you look at something like the London Stock Exchange, Curve, my company on the London Stock Exchange market, that if you think about that, we have to view those as a nuclear power station. They can't break, they can't fall over.
Yeah, so effectively, a lot of that risk can be to the detriment sometimes of innovation and driving things forward, and digitization as well. So some of the things we talked about around standardization, and what technology and standards are there currently available to enable digitization. So, Craig, what new technologies are currently being adopted to address these issues, please?
Sure. Well, there's certainly no shortage of potential solutions out there, whether they be from established vendors or fresh startups. I think the problem, though, is that in a lot of cases, although they represent incrementally better tooling, they still represent the same flawed point-to-point processes, and that's really a suboptimal outcome. Equally, it's incredible, really, how many of these the so-called next generation solutions ultimately still hang off of email. And whilst I'm not saying that email is suddenly going to die, there's no getting away from the fact that email is inefficient, it's unstructured, and it's not secure. Now, clearly I'm biased, but for me, the mission is to cohesively bring together a selection of tools, leveraging a common, secure and compliant collaboration platform. And the network effect here is huge. It goes beyond simple chat and video calling. If you think about it as the sell side, the buy side, and also the network players like exchanges, clearing houses, other vendors all come together, that helps drive standardization at an industry level. And as we've touched on already, data standardization is a critical precursor for driving automation. And I think by doing those things, you can start to really smash apart some of those legacy silos, fundamentally re-engineer processes, all with a mindset of delivering an improved client experience, better internal efficiency, and at the same time, a significant reduction in operational risk. And so for me, that's really why the combination of Symphony and ipushpull represents the perfect match. We provide that secure, extensible collaboration platform, plus, of course, the trusted directory of over 500,000 users. But then within the Symphony ecosystem, ipushpull delivers the tooling to easily bring together data from multiple sources of multiple types, which can then be used to drive data-driven workflows off the back of it. So it's really a hugely powerful combination. And obviously, as the Symphony community continues to grow, it will become ever more impactful over time.
That's great. Thank you very much indeed, Craig. Ayaz, if I can come back to you, and coming back to standardization, and obviously Andy spoke about the issues of regulation. If things move too quickly, are not tested correctly, then the risk is absolutely huge. So what trends are emerging at the moment around standardization, and why is it so important for automation and control?
So, standardization just is a huge enabler. And, when you kind of think about it, and I should qualify, when we talk about standardization, we really think about open standards, and, open standards that anyone can build on top of and leverage. And, that helps in a few different ways to the problem space we have here. So number one, like I noticed on the poll, integration was separate to standardization, whereas really the cost of integration is hugely related to what standards are being used in the APIs or whatever technical protocol is involved.
There's a lot of nodding going on around the room as you say.
Yeah, and I think if we had standards, that cost of integration goes down. The cost of developing a solution, whatever that product be, that people feel will help the marketplace, the cost of developing that product goes down because you have standards to basically bootstrap off. But also, you can build things like, testing harnesses that the whole industry uses. And so, there's a lot of control benefits that can come out of that. It's not just the standard itself that has to be implemented. There's a whole periphery of things then that can sit around that. And those could be open things or those could be proprietary things. That's the kind of beauty of it. So I think there's a lot of these benefits which aren't really obvious. But the key thing is that if you have standards, it allows people to focus on what is their core value proposition to the market, right? And that could be as a market participant, or it could be as an intermediary, or a kind of service provider. And so, once people focus on that, then it's just great for the entire market.
Yeah, I think nobody's disagreeing. You've got so many people nodding around the room. Matt, if I could come to you next, and what can fintechs like ipushpull be doing to help drive forward that standardization? And what are then the ultimate benefits for the community, please?
Well, I think like Ayaz has touched on, in terms of driving new standards, what everyone wants really is industry collaboration. FIX is a good example of a well-governed, well-accepted protocol that's been around for a long time. And then more recently, you've got bodies like Finos that are creating standards for desktop workflow. But there's also situations where firms just get on and do it. Something can become adopted as a de facto standard just because people have started using it.
Yeah.
I think fintechs often sit between all of these different types of standards and approaches. For example, our platform can integrate and conform to the likes of FIX and FPML and Finos, and that's because we want to adhere to existing standards. But we've also got some innovative customers that have particular workflows that their counterparts are already conforming to. So, for example, we're working with the buy side and a number of dealers using a syntax that we've brought together. And the idea is then to have additional participants able to contribute to that too. And then we'll feed that standard back into the industry and it becomes a virtuous circle. And as the standards improve, it enables greater workflow automation. And because of technology, there's also another approach. So that's the ability to interoperate between all the standards, utilizing tools like data mapping, chatbots, and so on. So you can have two different counterparts, can actually have two different inputs and outputs and even standards, but they can both still communicate seamlessly because of the interoperability and the data mapping that sits in between it. So something like our platform and a few other fintechs can provide. How does this benefit the community? Well, I think fintechs ultimately provide, I think like Craig said, a collection of tools and services that allows you to create a data-led approach and a more efficient, client-focused process. And that's without having these kind of cumbersome legacy processes hanging around. And then financial institutions can leverage fintech's technology to drive efficiency with the least amount of disruption to workflow. So the pre-trade kind of world, that can be an easy way of communicating with multiple people, an easy way of managing those negotiations. But fintechs also allow solutions to be fast to market. So it's easy to build and deploy bespoke solutions that no one else has. And then that can create competitive advantages as well as encouraging innovation. Probably touching on some of the comments that Andy made, it's that fine line between innovation and risk. And then lastly, financial institutions can focus on their value add, while fintechs can focus on delivering, the best software for that particular problem. And then it means a bank or vendor standalone applications or software, they're not longer forced upon users, and instead fintechs can enable those processes to be embedded into their clients' workflow. So it's more seamless for the end clients, and it's more seamless and easier for the sell side, the broker and the vendor as well.
Yeah, I think that's what we're touching on there Craig's mentioned it already, and you've been very eloquent around it, is the ability of having interoperability between multiple systems. And one of the systems that seems to be very clearly at the forefront of this type of pre-trade negotiation is chat systems. So we've touched on some of the difficulties that people are seeing at the moment, and the difficulties around standardisation, around pre-trade negotiation. We've touched on some of the initial technologies that have been utilised. So, what do we really think the future of pre-trade workflow looks like? Craig, can I come to you and think, it's been a funny old year, and do you think COVID, the increased remote flexible working, has accelerated digitisation and how organisations have been responding to the demands of the new environment? And is this what's going to drive some of the future of pre-trade negotiation?
Yeah, I mean, look, if I think back to March when it became clear that the COVID situation was pretty scary, it was about to get a lot worse. Candidly, we were inundated with customers saying to us, "Help!" And the reason for that urgent call for help was that for many of our customers, their business continuity plans historically had been designed to deal with a scenario where maybe there was a fire or a power outage in a building, perhaps worst case, a bomb going off in the city or something like that. All major events, of course, but ones where ultimately switching to a disaster recovery site would largely mitigate.
All to another centralised environment.
Exactly right. But when you think about the context that we currently find ourselves in, it's a whole fresh challenge, right? How do you keep your workforce connected, productive, secure, and compliant when they're all locked down for months and there's no clear end in sight? And for me, there were really two key takeaways. The first one, without a doubt, there has been more digital transformation in the past 8 months than in the last 8 years. Whether that be down to long-held biases against working from home really being disproved by necessity, or whether it be the fact that lockdown has, again, being candid, exposed some manual processes which firms had previously kind of band-aided by offshoring to low-cost locations. I think I could think of so many different examples that I've seen over the last sort of 9 months or so. But the punchline is the same: the pace of change and transformation truly has been incredible. And I think the second takeaway is really the need to have a coherent omni-channel strategy. It's a trend that was already firmly established, especially outside of financial services, ironically, but which I think COVID has really highlighted. And at its core, it's about customers being able to frictionlessly switch between multiple different communication channels as it suits them, kind of device interoperability, if you like. And in a case of a heavily regulated industry like financial services, the challenge is enabling that desired seamless customer experience while still maintaining the strictest levels of compliance and security. Yeah. So I think the mission is to be able to take communication which historically might have been thought of as siloed or non-compliant, like WhatsApp or WeChat, for example, but then to funnel it through a more comprehensive platform which addresses those shortcomings, but at the same time meshes them into a broader workflow digitalization strategy. And of course, look, maybe my lens is skewed, but certainly the demand we've seen for our Connect product, which does exactly that. It pulls channels like WhatsApp and WeChat together. It funnels them through Symphony to deliver that objective. It has been absolutely huge. To give you some context, I mean, 2020, we've seen something like a 300% increase in the messages sent across our platform every month. And that really reflects, I think, a fundamental change of mindset, a resetting of muscle memory. And I think now that people have seen the benefits of that kind of chat-based approach, I think it's here to stay.
Yeah, that's very interesting. Andrew, can I come to you? I saw you nodding your head a lot there. Has this been the same experience in your organisation? And what have been any particular challenges you've had in this whole move to a more decentralised working environment?
I mean, I think a lot of what Craig said there resonates with me, which is why I was shaking my head or nodding my head violently there. I think compared to many industries, we had a head start when COVID really hit. both through necessity and luxury. Most of our businesses had BCP plans in place that, Craig alluded to. Yes, they were about moving from one centralized place to another, but that's better than nothing. And I think that, definitely at JP Morgan, we were able to adapt a lot of those plans and take them one stage further into having, a decentralized workforce where it needed to be. I think, would any of us a year ago said that every single panelist on this call would be working from home, including an execution trader? No way. I think, there's been, an undeniable push through the inertia of decentralizing workforces in any financial services organization. I think that has inevitably and will inevitably drive more digitization. I think one thing that we really see from our perspective is trust in the machinery. There was back in February, March, April, May, there was unprecedented volumes in market activity, and for the most part, everything worked. And I think that's a testament to when you do digitize processes and you do it properly, then they do stand by there for you. I think what will be great to see is when the dust settles, as we move from pushing out our workforces as a necessity and really do the lessons learned and look at how we can innovate and use the experience of the last 9 months positively and actually take the good things out of it.
No, I think that obviously what Craig was saying very much resonated with you and has been your experience as well. Chris, can I come to you next? We've talked a lot about digitization, standardization, operability, loads of bots, etc. How does technology provide you a competitive edge in your business?
Sure. So I think it varies slightly for everyone depending on their role in the marketplace and what they're offering to their clients. At TP-ICAP, our target is to electronify more markets, to aggregate our internal kind of silos. So we've got various legacy technology stacks, different pricing. We want to aggregate that for our clients. And we want to diversify the kind of range of services, the products, and we're also seeing a kind of new client base emerge for us. So high frequency trading firms in the past decade. We're seeing kind of more demand for, if you look at market access and some of our competitors, the kind of all-to-all platform. So the world is changing, and our use of technology within the group has got to change. On kind of a historic basis, we've used and tried to run our own platforms. You go back a decade, you'd walk into a trading floor, and like the credit side, you've got every single broker with their own platform. The credit trader's got 8 different screens in front of him. 6 of those are just trading platforms. These days, he's got 1 or 2 screens with a kind of aggregation service. These kind of platforms are pretty closed in nature, and the APIs them aren't accessible to third parties such as ourselves, so we can't actually innovate. And where we're seeing kind of opportunities now is take platforms like Symphony with OpenFin. They allow us on the kind of open API basis to innovate pretty rapidly. They allow us to produce kind of robust, resilient products and services and offer those out to our clients. And when you're kind of in the product and service industry, ultimately you're investing in a wide range of products and services, knowing that many of those will fail. So you want to keep your costs down, you want to keep time to market down, and you want to kind of maximize the winners and find the losers and figure out which ones those are quickly and move on for them.
That's the whole idea of fail fast, move ahead.
Yeah, absolutely, fail fast. But on that point, like people kind of associate fail fast with technology that also doesn't work, and that's very much not the case. It's just around which products don't get the critical mass, which products don't get adoption. Yeah. To Andy's point, we have to be very capable of delivering reliable, resilient technology that works for our clients every single time they use it. If we can't do that, then we've not got a service or product that's going to get adopted.
Yeah, and I think you're right. It's the fact it's not necessarily always the technology that fails. It's quite often the technology is very sound. It's the product that's built on that technology, and how you then try and deliver it to the client, whether that actually works as a business model. Moving on from that, thanks very much, Chris. What impact do you see these developments having on the reach of exchanges, venues, and clearinghouses, Andy?
So I think that's a really interesting question. So we, as an exchange, you would expect us to have really standardized processing coming in, and you'd expect us to have really efficient processing going downwards onto the LCH. And that, if anything, in terms of the market, is probably the most straight-through process, most organized. But going back to some of the points that Richard made right up at the front, of the conversation, there are definitely bits of that process pre-trade which are conversational. They're definitely price discovery inefficiencies.
Yeah.
And doesn't, just because you have a great matching engine for trading doesn't mean that's the only way that you have to trade. So, for instance, there's a product that the LSE has called Turquoise, which allows blocks to match in the middle of the market. That gives people block-sized transactions. And why is that? That, again, is just another way of interfacing with the market. Clearly, as an exchange, we demand lots of process and control around that. Where I think there's some great things listening to where Matt and Craig talk is how else can the business work? How else can people work with Chris's style of organization to come up with a new way of finding liquidity, matching buyers and sellers that occur outside or alongside classic exchanges? And to me, I feel that that process has always been held back because of either regulatory oversight or the operational risk elements.
Yeah.
And now maybe it gets freed up and released by that. So perhaps there's a great opportunity for new ways of innovating and doing new business that comes as a result of this. Lastly, I would say that not all people ran to new things in the crisis. So where Craig had a brilliant crisis, congratulations. At Curve, we didn't have that great a crisis. As a new exchange competing with an incumbent who's in that market, people just said, look, we're not going to trade on the new one. We're not going to look at two screens. We're just going to look at one. So while we've seen a huge uptake in innovation in some senses, for us, it was our growth and an explosion of open interest has occurred when the market and people have got back to some sense of the new normality.
Yeah.
And so to me, I think change, going back to that bid offer in terms of risk reward, has to occur in a stable environment when you're talking about the size of downside risks that we were previously talking about when things go wrong.
Yeah. So it's almost, you need the crisis to drive the innovation, but when you get to a relative normality, then people can sit back and go, right, okay, we've got some new ideas here. How can we move those forward? I think that's a very, very interesting concept. Richard, coming to you, and I know you started the conversation here with some of the issues that you're seeing on the trading desk. What are your hopes for the future, given what we've been discussing this afternoon?
How long have you got? I'll be
20 minutes.
Yeah. I think the most important thing that's happened, and this was happening before COVID was going on. So let's not, park it as something that's happened since COVID, because the people within this webinar will agree with me. We've been pushing for industry-wide collaboration for a long time, and I think that's my one key hope going forward. And I think it's within companies, as I've described, between desks, between different departments. Often, IT teams have been very siloed from the people at the coalface, like myself, and back office staff, middle office staff, and so on and so forth. And things like your clients as well. There's a lot of work to be done there. So I think within companies, I think also that the buy side have got to get aligned a little bit better. So I need to speak to my peers and try and work out what problems we can solve together and solve it for the industry. And I think that aligned as well is on the sell side. I think the sell side probably need to get closer. And as an industry, that means we all need to get a little bit closer and collaborate more effectively, and also try and benefit from the having larger size to solve the problems. So I guess my hope is the industry comes close together, and I think as well that we could see quite a lot more cross asset solutions. Again, that's breaking down the walls between different trading desks. So I think that could be something for the future. I think more importantly, more pertinent to today's call is greater uptake of technology, and trying to embed it within your workflow solutions. I think the community needs to have a sort of a mind shift as well. They have to stop sort of looking at risk and just being scared of it. I think we've alluded to that. A couple of people on this call have alluded to that, and looking at the rewards that technology can actually give to your workflow solutions. So I think that's important. Something else which I think, again, we've had 2 or 3 people talk about on this call is standardization. I think without standardization, we have, we really haven't got we can't start moving forward until we do have more of that. And often with standardization, and it's a key thing I take around things when I'm looking at TCA and data and so on and so forth. We often have so much data we don't know what to do with, and I think that often the case of simplification is very useful. Inherently, more is less, and I think we need to really start to have a think about what data we're using, how we're using it, and in fact, do we need to use the data we've got?
That's quite the list.
There's more.
I'm sure, and we'll probably come back to that in a little while. Matt, can I come to you? What's your experience been recently of that collaboration between organisations, and also, some of the things that Richard they're hoping for the future? How do you see those being delivered?
I think in terms of collaboration, it probably picks up on that same point I made earlier, where fintechs sit in between a lot of this conversation. We're going back to that fine line between risk and innovation. Obviously, if that's a curve, fintechs are on one end of it. So it's a way for bigger financial institutions to probably dip their toe into a certain extent. We're involved in lots of conversations where it's kind of buy side, sell side, and us, or broker and sell side and us, and we're kind of sitting in the middle as an enabling technology and as a standard. Going to the second point about how is this being delivered, I'll probably elaborate on kind of what Richard was saying about simplification. Simplification is key in any software. If you can make something simpler, it's going to be easier to use. And we all know how people that are in the thick of it day in, day out, they're not that open to change sometimes. So you need to make it easy for them. But on that kind of data piece, which is kind of where we sit, data drives financial markets. But data sharing, when we've sat on a sales desk or on a trading desk, data sharing often hasn't changed much in the last few decades. It still resorts back to those manual processes, which, like Andy has said, are resilient because they work, because you can throw people at it, but it doesn't scale very well because you do have to throw people at it.
Copy and paste served us well for a long time, didn't it?
No, exactly, and it still does. As much as Craig is bashing email, I love email. I think everyone loves it. It's a love-hate relationship, isn't it? Everyone loves email, but you also hate it and you want to move away from it. I think though, in the world of some of the pre-trade negotiation that we've been talking about, this world of kind of historically, you got this non-standard complex trades like the packages or the baskets that we've been talking about. That area has been neglected somewhat in terms of technology solutions because it is difficult to standardize and automate. But I think right now there's a combination of a thriving capital markets fintech ecosystem. And because of this rapid transformation we've seen due to COVID, and a few things kind of converging really, means solutions are now available for those painful processes which have fallen back to legacy way of working. I think the mind shift that Richard's talking about was already beginning to happen anyway, but it's just happening fast. I mean, as you just released a Legend, your kind of data open source projects a couple of weeks ago. So you've got institutions like that are open sourcing things. So that mind shift is happening. I think it's now possible to unbundle now the data that is sitting in those legacy ways of working, the spreadsheets, emails, file share, voice chat, and then you can rebundle that data and the tasks that were spread across those different applications into new structured workflows. So we believe the future state of technology is improving human decision making, taking the heavy lifting away that someone like Richard has to do. There's essentially manual admin work that you're having to do, that your counterpart on the sell side is having to do. So instead of having, highly paid professionals doing robotic tasks, we can instead combine, the human and the machine conversations, the messages, the data, and put those all together and then eliminate manual processes, create and adopt standardization, and then improve efficiency. So I think the ultimate goal for most technology providers really is to free up traders and salespeople to do the things that humans can do, discuss the markets, give opinion, have a chat. The messy world of manual processes will then disappear. Execution will become frictionless. sooner or later, those desks will also stop replicating the old methods of working, like the emails and files and copy paste. And instead, those new methods will then fit the new live and collaborative and interoperating tools that are now available. So it's kind of getting to this tipping point now where there's the mind shift, there's the technology, there's the push from COVID as well, and also people working at home. You know, you've got limited workspace or desktop on, you know, in front of you, so you have to become more efficient. So it's I think next year is going to be an exciting year for this area.
No, it's really interesting. Something that I know from previous lives is traders and salespeople can be reluctant to change at times. And Andy, I know you and I have discussed this before, and some of this comes down to that risk element that we have with rolling out new products. But if I could sort of speak to, say, Ayaz, Chris, Andrew, from your experience, how do you handle pushback from people on desks when you're trying to roll out new innovative technology? Andrew, is that something you could comment on?
Yeah, absolutely. I mean, look, I think it starts from the design phase. You know, I think if you have the right people on board at the inception, then the whole process goes a lot easier.
Mm-hmm.
And I think obviously there has to be benefit both to the user and to their client as well. Without that, what's the point in the technology? So, you know, for me, it's fairly straightforward. Get it right to begin with.
Yeah. Is anything you can add to that, Ayaz or Chris?
Yeah, I think you know, just building on that, you know, it's basically impossible without the buy-in of the desk, right? I think, like, you know, frankly, if this is just pushed as a technical exercise, it probably won't get very far for the good risk aversion reason. Like, traders are there to manage risk, right? You know, and so I think that you know, really education around the benefits, the things that we've been discussing on this call. I mean, it's great even to see traders or ex-traders on a call like this. Like, would that have happened a few years ago? Like, I don't think so. So there's a general technical, like, proficiency, data proficiency is continually increasing as, you know, as the world goes down the digitization route. And so, you know, there's going to be that tipping point, as someone mentioned before, where, you know, the business is really going to get it. And I think the first people over the line are going to benefit a lot because, you know, they're going to be the ones forming this ecosystem, right? And so I think there's a lot of advantage to getting there quickly.
Thanks very much for that, Ayaz. We've got a number of questions coming in from the audience, and I think what you were touching on there goes to one of these quite well, which I'd like to put to Andy Ross if I could. So Andy, the question is, was there any big bang / catalyst moments in the electronic shift in equities, for example, that other more manually traded markets should be aware or take note of? Or do you see it as a more gradual series of shifts as technology, such as the integration of the likes of Symphony and ipushpull, helped facilitate that move?
So let's talk briefly about the futures market. You can say the same things about the equity market, but the markets were built around trading floors of physical location, and people used to stand around in bright coloured jackets and wave at each other, and there would be segmentations. You'd have brokers, and you'd be yours, mine, bidding. Exactly, and the market out there would be hand signals, and the reality was that that became inefficient with the movement to electronic trading, and people didn't want to have to phone in a broker. They wanted to be able to trade electronically, and that migrated off a floor and onto a screen. But what then happened is that the innovation semi-stopped. And so if you look at many markets, the liquidity doesn't exist in plethoras of places. It still exists in the equivalent of a floor. But look at newer markets. Look at something like an OTC derivative market. There, the liquidity existed between bank desks talking to each other via someone like Chris, who's providing that kind of electronic marketplace for them. And there you have a plethora of choice. You have a plethora of whether it be iSwap, Trads, Bloomberg, whatever within that market structure. And so I think there's kind of almost like a stratification of what was the prevailing market structure and what was the prevailing technology that existed at the time.
Yeah.
Then I think that some of that has ossified, and you get these kind of, oh, this is the way it's worked, and we migrate to this point, and then you get this inertia because nobody wants to change it because if it isn't broken and there's a lot of risk that we've just discussed. What I generally believe is that the innovation of vast amounts of data, I'm sure that everyone saw recently the Apple new M1 chip, right? On this is a PC, right? In your room, in your lounge at home, you can have a computer that can do 1 trillion calculations in a second. 5 years ago, to do that, you needed a helium-cooled central core processor the size of your house to process 1 trillion things a second. Moore's law is changing the world. And then you have the tools that, like Matt has at ipushpull, that allow you to integrate things on top of that. And the standardization that Ayaz is talking about in terms of connectivity layers and processing between that, I believe that these, what I'm going to describe as historic situations, like exchanges or whatever, are going to be competed against fairly vigorously. And being at an exchange, we're aware of that, and therefore we partner with our customers to be in front of that change, not behind it.
Yeah, I think that's very interesting, to say the least. And that idea of having 1 trillion a second going on in the house is certainly a big changer. Another question we've got coming in, and I think this should be a good one for Richard and probably Chris actually, because I think Ayaz has had his say on standardization so far. And what's the best way, in your opinion, to achieve standardization in the industry, and should it be driven by a consortium of firms?
Well, I think, I think in the first instance, the idea around standardization, comes from a problem you've got across your workflow on your desk. And I think at that point, you start to define the problem. I then think along that line, you've got to find somebody who you can collaborate with to deliver the solution to your problem. And then you industrialize it, i.e., you'd look for peers and see who has the similar problems and what it is. But I think with all these things, as I said earlier, I think if you just take transaction cost analysis as an example, I mean, when you're looking at child order fills, there you only really need a few bits of information, 5 key pieces of information, in order to standardize it. Doesn't mean you don't potentially want more, but I think in the first iteration, you need to just almost walk the walk and walk through the trade itself and come up with what are the 5 key pieces of information you need, and then build on that. You start off with a standard 5 bits of information, and then say, well, actually, what else is pertinent and what else is useful, and slowly you'll get an improvement in the amount of information that you can take on board. But regardless of that, even though we can do 1 trillion calculations in a second now, I think we have to be careful that we don't fill these sorts of standardizations of forms, if you like, with too much information that's not relevant. As I said before, I think less is more. So I think the key question there is, as I say, to summarize, is have the idea, try and find a technology provider that will grant you a solution, and then I think you've got to be open and collaborate with your peers to say, look, I've had this idea, have you got this problem around this workflow solution? And I think 9 times out of 10 you'll find that that your peers will have the same problems, and again, it could be a cross asset, it could there could be any amount of uses for that problem that you've solved. So I think the key is, just as I said before, collaboration.
Thanks, Richard. Chris, just a quick one, same thing to you, do you think that's better done with a consortium, a little bit like the fixed protocol, or do you think, to Matt's point, there is a little bit earlier, there's innovation going on all the time, and as people start to collaborate with each other, it will filter out almost by osmosis?
I think it depends on what you're standardizing, and Fix is a very good example of kind of standardization of message formats. What it doesn't truly do is standardize processes or workflows.
Yeah.
And kind of the experience we're having with a lot of our customers is that trying to standardize the message formats is actually the struggle. Everyone has their own internal systems, and they need the spreadsheet and message, however delivered in a certain way, in a certain format, so their machine, they can copy and paste it into the kind of next part of their workflow.
Yeah.
I actually think that the kind of standardization really does start where we adopt kind of the same platforms to deliver these workflows via. So Symphony is a good example, OpenFin. By using those and kind of starting there, we can deliver custom messages, but in a more kind of standardized way. And that in turn will actually start teasing out, actually, here's where we can kind of standardize. Here's how these other firms are operating with this platform. Here's how it's already working. You can just take it and use it. I think that kind of standardization of communication channels and kind of delivery mechanism is actually where we're going to kind of see most innovation and most adoption. It's probably the most expensive part for any firm, be it a venue or a bank, trying to integrate and figure out against 10 brokers, 10 exchanges, and run all those concurrent connections. It's expensive. It's time consuming. For a trader to have several different chat platforms with dozens of rooms in each, it's inefficient. Whereas if you can deliver your products and services via a single portal, it represents a huge gain in efficiency, huge reduction in kind of risk, and kind of more time free to invest in the right areas. But I think we'll be stuck with kind of messages and formats driven by certain banks in their own way for a long time to come. I think consortiums as well have proven themselves that they work well-ish. However, you get situations where you get kind of some banks going off and doing one and others go, well, I'm not going to join in because they're my biggest competitor, and they go and start their own consortium. So I don't think that approach works well frequently. Fix is a good example of working well, but there are many other kind of alternatives to Fix that have come about over the years and are actually adopted more by some of the exchanges for some of the more kind of low latency trading. So it's what you're standardizing, I think, is the key thing to look at.
No, that's really interesting, and that combination of answer from both yourself and Rich, I think, have been very useful to the conversation. We're running out of time. We've probably got about another 2 or 3 minutes. I've got a question here that I'm going to put to Craig, and then after that, I'd like to go to Matt just to do a sort of summing up of the conversation we've had before we say thank you to all our panelists for the afternoon. So, Craig, can I hit you up with this one? And I'm going to read it. It's a little bit long, but you'll get the idea. It's has the arms race on technology for cheaper, faster, quicker driven the market towards more business off screen, as most participants can't compete. So, is there actually a need for more pre-trade negotiation?
Wow, there's a question to throw.
There is a question for you.
Look, that is definitely a question that requires proper digestion. I think just trying to tackle it though in like 1 minute or 2 minutes, I think if you look across the different asset classes, right, and we touched on this thread earlier, right, like, you know, equities clearly of all the asset classes, or equities, I guess, FX, right, both in different ways, very standardized. You look at markets like credit, for example, right, bank loans, etc. You know, they're hugely imperfect markets, right, and so the different blend of challenges around, you know, analytics, trying to find liquidity, you know, the whole reporting post-trade, that whole type of piece, you know, they all have their own little mini microstructure beneath them, and some of those are, again, hugely inefficient. And so, you know, there are hugely important asset classes that are not traded on exchanges that, you know, require some pretty urgent digital transformation. So I think that there's a lot more work for us all to do together. Yeah, and to be honest, I think, you know, some of the stuff that ipushpull are doing in the LDI market, whilst that is a subset of the rates market, actually some of the approaches that ipushpull are taking with the firms they're working on it, I think actually can be applied to a lot of other asset classes. It's more about establishing that tooling and that fresh mindset. And then I think there's plenty of other UK use cases we can go to next. Maybe I'm dodging the question a little bit, but that's a big question.
Well answered, and I'm sure there's plenty of time to have more discussions on this down the road next year as we move forward with that. Before we say thank you to all our participants and attendees this afternoon, Matt, could you just give us a sort of summary, a sort of summing up of the discussion we've had this afternoon, and just wrap up for us, please?
Yeah, sure. I think we all agree, like this year, there's been lots of pretty bad things that have happened in the world. But in terms of what we're focusing on out of this discussion with pre-trade, client workflow, standardization, you can see there's a lot of things going on across, buy side, sell side, brokers, tech vendors, exchanges, every part of the trade life cycle, every participant, there's something going on. That mind shift, like Richard was talking about, is beginning to happen. I think, just summing up probably what we've heard, you have this risk versus innovation kind of, where's that sweet spot? Yeah. Because, in a highly regulated world, there's only so much risk you can take. But on the other side, you might have some OTC derivatives which still rely on these old legacy processes. Like Chris was saying, you need to be selective about which problems you want to solve, because development resources are a premium. You need to maximize your winners. You need to limit your losers, and don't be afraid about the losers, because the losers is about product rather than technology. Yeah. Andrew's talking about when these solutions are being designed, you need to work with all the players. Be working with the guys or gals on the desk. You need to be working with the traders, with the salespeople. You need to be providing benefits to the users and the clients. And then I suppose you're looking to utilize fintechs to deliver or help enable and accelerate some of these solutions. Fintechs which can deliver things fast to market, which can help adopt or conform with standards, or even create or standardize the standards. So look at what fintechs are doing, work with them. They can often be that key point in the middle of conversations, which can help sit alongside probably some of those kind of consortium type discussions as well. But yeah, an exciting year for 2021. Thank you, panelists, for joining. Appreciate it a lot here from ipushpull. Everyone in the audience, thank you for taking the time to listen. And we can kind of sign out from there.
That's brilliant. Well, thank you very much indeed, Matt. Can I just remind everybody that the Financial Markets Insight Report is available to download, and you can see there up on the screen there, with contribution from people across the panel today. And you can go into more depth some of the things that we've been discussing. So without taking up any much more of your time, panelists, as Matt said, thank you very much for joining us today, and thank you very much for a really, really interesting discussion. We could have gone on for a lot longer, and thank you very much indeed to the attendees for joining us today. And there was a great number on this afternoon, so it looks like it was a very interesting conversation for everybody involved. Thanks very much indeed, guys. Have a great rest of the day.